welcome back. Still tuned into Closing Trades. Nitin Raheja is also joining in on the show. Nitin, hi there. Good afternoon. Let's get in your take as to how you're looking at the overall auto space, given the fact that we did have the data come out from FADA that the retail sales of CVs are down considerably on year, two-wheeler sales, three-wheeler sales as well. Do you think that we've hit a speed bump only for the time being, or that the road ahead for autos does continue to look a little bit dicey?
Thank you and good afternoon to everybody. I think clearly auto sales are going to hit a speed bump in the short term. We all know that the whole length and breadth of the second wave has been quite devastating and has gone right into the tier 2 and tier 3 cities. And, especially if you say, for example, if you take the whole rural hinterland, which was hitherto very robust last year, is seeing unemployment go up, is seeing the devastating effects of COVID, manifest, and you're seeing that on the two-wheeler sales. We read about Hero, shutting down plants for a few more days, and so on and so forth. So, CV sales being impacted with the lockdowns happening sporadically across states, again, not surprising. So, I would think that at least for the next month or two, auto sales would hit a speed bump. I don't think we're going to see immediate buoyancy coming back really soon, at least not till we have some sort of a clarity in terms of when we have peaked out of this wave and, even post that to get consumer sentiment going. I think the biggest damage has been to consumer sentiment and mood this time around, unlike last year. So I think it will probably take some time to come back.
On where auto and Motown is going to find further strength. For now, we're holding up to 15K, 145 points higher at the highs of the day. What one is also seeing right now is a fresh lease of life across the pharma universe. You saw those sporadic moves come in last week as well, and that trend pretty much continues. Glenmark is now soaring high by about 7%. There's a Torrent Pharma, which is holding up 6.25%. Divi's as well looking good. Sun Pharma, DRL, as well as Cipla too, making strong moves as we speak right now. I just wanted to revisit where you find fresh trading opportunities within pharma.
Well, I think from the large cap and the mid cap space, I think I'll still believe that a couple of names look very, very attractive from the charts. Lupin, for example, I think the stock which hit I would say a breakout mode even last week, mid of last week somewhere. I think that stock looks fairly attractive even at current levels of 1200, 1230 range where it's trading. So I think that's one stock to look out for. Specifically from a short to medium term view, I would believe at least a 1300 to 1350 kind of a target range could be possible on the stock. You add to that, two of the other names. I think Sun Pharma as well looks extremely strong. In fact, I was looking at some, indicator analysis for Sun Pharma that even at current levels of 700 odd, I think the stock has confirmed a breakout on the slightly longish term time horizon. So not a daily or a weekly pattern breakout, but more of a monthly and a quarterly pattern breakout for Sun Pharma seems to be occurring at the 700 kind of a zone. Add to that, one of the other stocks, which I think I had indicated last week as well, that was an Aurobindo Pharma. That stock hitting a fresh 52-week high for itself today. I think that's also a very strong signal of momentum. So, it now becomes, I would say, a problem of plenty that you have so many stocks in the pharma space which looks very attractive. So even if you try and pick and choose the slightly large cap ones or the stronger ones, even though the returns for these stocks could be a bit lower as compared to the high beta mid cap space, but I believe that the stability of these patterns are quite stronger. So I think picking up from the large cap space itself could be a good opportunity for farmers.
Right. Nitin, that really seems to be the case because what's playing out right now is sort of a re-rating for the entire universe within pharma, if you can call it that. You think there could be fresher names within pharma that we could pick out perhaps this time?
Surely. I mean, we've always been believed that we need to play pharma on a bottom-up basis, and I think that story continues to hold good. More domestic-facing names are doing well at the present moment. as such. I mean, pharma's got collective tailwinds going for it. You have the regulatory framework improving. You have the government coming up with the PLI scheme, and you have this RBI dispensation of providing more than adequate capital for the segment. You have the China plus one factor playing out, and then you have the entire domestic market doing well. I mean, if you take, for example, in the short term, I think the domestic play, and especially pharma companies who have some sort of treatment or therapeutic drugs which are aimed at COVID are continuing to do well. I mean, a classic case being Glenmark, as you mentioned. I mean, if you take just the sales of Aviflu and you track it for what happened in Jan, Feb, March, suddenly there's been this huge, an absolutely unprecedented jump that took place last month, and in April. So I think, pharma will continue to hold, and I think we would prefer some of the mid-cap pharma names and companies who have a strong manufacturing basis, API orientation, injectable capacity. These are companies who will, in the next few years, continue to do well.
All right, let's get a move on then. And with HDFC reporting a steady set of numbers in the fourth quarter, we caught up with the Vice Chairman and CEO, Keki Mistry, in order to understand their collection trends and whether or not the second wave has caused any impact. Let's listen in.
So it's too early to sort of look at that comparison. If we were to look at April 2021 and compare it with, let's say, what it would have been in April of 2019, which is pre-COVID, it's not significantly different. Marginal impact would be there because of COVID, the second wave of COVID, but it would not have been that significant an impact. Going forward, obviously, we'll have to wait and watch. But here you must understand that for a individual, for a housing loan, the average loan-to-value ratio is extremely low. When the first wave of COVID happened, we did a very quick back-of-the-envelope sort of a computation of what the average loan-to-value ratio for loans outstanding in the books would be. And we felt at that time that it would be in the region of between 40 and 45%. So there is a massive amount of equity that the individual has in the property upfront. And therefore, in the unlikely event of someone just not being able to make payment over an extended period of time, we have the ability to go through a foreclosure process and collect the money. So historically, if you see our loan losses, money we've not been able to recover has been very, very negligible over the years. So I would say again, to answer your question, April 21, not very different from what April 19 would have been, which is pre-COVID.
All right, that's the view coming in on HDFC from the management. Meantime, Nitin, let's understand what your outlook is on the cement space. After we had Ultratech come out with their quarterly earnings, and now it's done and dusted when it comes to ACC, Ambuja, etc. How are you looking at your pecking order when it comes to the large cap cement counters?
With the large cap cement counters, we like Ultratech. It's right there at the top. Primarily because, if you were to go and check in the market circles, you will find that this is a company which is a price setter. All other companies are price followers and such. What is very interesting is, when you look at the deleveraging that has taken place in Ultratech, that has been immense and huge. Their net debt has come down dramatically when you see the current result. And I think, from a cement perspective, I think they're the most optimally placed. We also like Dalmia Bharat, which is also should do exceedingly well. They have a business in East, as well as, and there's a lot of infrastructure work that is also happening there. And then, we would probably put the Ambujas and the ACCs, primarily because, their capacity expansion has not been as aggressive as we've seen with the top two players.
Sure. Okay. Let's also hear it out from Chandrasekhar Ghosh, the MD and CEO at Bandhan Bank. He spoke with us earlier today about how the provisions strengthening the bank's balance sheet for the future growth in 2021-22, and of course as to how a large part of their book hasn't been able to repay the loans at the stipulated time, given the second wave has hit their businesses in the smaller towns.
No, if you see that we are facing that the pandemic situation in the fastest wave, and little bit also about the Assam situation. All this together, we find out on that some of this the bank portfolio are as a NPA, and so that we are partly taken as a written off, and some part of that we have been taken as a provision, so which have been strengthen our balance sheet for future growth of the 2021 and 22.
What's your own sense on where within banks do we see strength actually kicking in? Because banks like Bandhan, etc., the small finance banks that is, and the micro lending companies, they're definitely facing the heat, because this time around the second wave has impacted tier 3 and tier 4 cities as well.
Yeah. So, we continue to focus and like the larger banks, who are more diversified and have size and have the wherewithal to be able to manage these short-term challenges. In the private sector space, we continue to like, the HDFCs and the ICICIs, and of course now Axis is coming back well. So we would rather like to play it through some of these larger names, where we find at one level, growth continues to be robust, the books continue to remain strong, and they have the capital to capitalize on growth when it comes back.
Coal India and L&T on the charts?
So I think Coal India looks very attractive. In fact, Avan on the BNSN show as well, I had given a buy on Coal India, expecting that the stock would break out, and that breakout today, which you've seen above the 50-day moving average, would lead to a much more stronger uptick. So it's moved on from higher from those levels, but I believe that this could be a start of a decent uptrend for Coal India, and I would sense the previous swing high for Coal India, which was in the month of February, I think 162 or 164. I think that level should be reached. In fact, just to add on to this point, the data at least on the last 10-12 days from 24th of April or 20th of April somewhere, when the Nifty hit that low of 14,296 on closing basis, from there on, the PSU stocks or the CPSE index apparently has managed to be the second best index, at least in terms of the gain in RSI, other than the banking index. So which means that there is a strong possibility that many of these PSU stocks which are heading towards or showing signs of breakout, they could not just be a very short-lived or a short-term breakout, but they could actually move up into stronger uptrends over the next couple of weeks. And I think in that aspect, many of the PSU stocks like Coal India, ONGC, you have Bharat, BHEL, you have BEL, these stocks are looking quite strong. You've seen, at least a second degree of momentum into coming back into these names. So, for example, BEL has moved up pretty well from 131, rather 120, 125 levels to current levels of approximately 135. BHEL has moved on to 65 kind of territory. So, these stocks are looking quite attractive. And I would sense that if someone is looking for a momentum play, I think Coal India, ONGC at current levels could be very attractive buy even from current space. I would look at a multi-week rally, say somewhere in the tune of at least 8 to 10% into many of these stocks.
Okay, that's the view coming in on some of those large cap stocks that are flexing their muscles in today's trading session. In fact, L&T is slated to come out with its numbers later this week. Nitin, what is it that you're expecting from the engineering behemoth when it comes to management commentary on guidance, the kind of order execution that they've seen, as well as how you're expecting the overall quarter to shape up?
So we don't really track L&T very actively, primarily because, it has not been a great value creator all these years, with a lot of its capital being allocated to so many other ventures. But I would not be surprised if I were to just tell you what our broad take is, that order books would probably be looking good for L&T. I think execution would be having some challenges in the near term. If one really wants to play infrastructure, which, by the way, at the best of times is a very tough play to make money on, I think I would, look at playing it through L&T as such. But, we don't really actively cover or, look at the stock.
On the charts of L&T, ahead of its numbers, it's running up by about almost 3.6% right now. Naresh, on the charts for L&T?
L&T, we are looking at, say, not really positive on any of the names which are more oriented towards the domestic side of it. So L&T, we are still very cautious as of now. The price action is not that great in terms of relative momentum. So we would still wait and watch for the stock to actually, over the next couple of sessions, to show more momentum, and then we may change up.
Okay, that's the take coming in at L&T. But a bumper Q4 for Tata Steel as the strong debt reduction and operating performance managed to aid their numbers in the quarter gone by. We caught up exclusively with the CEO and MD TV Narendran and to decode whether steel price hikes would maintain the momentum and, of course, what's the outlook going forward for FY22.
The prices in India have not been isolation. In fact, I dare say that the steel prices in India are probably the lowest in the world at this point in time, because if you look at international prices, they are much higher than the prices in the domestic markets. So any of our consumers who are exporting their products are actually at a significant advantage, because their competitors in other countries are buying steel at higher prices. So if you look at the US, the steel price is $1,500 for hot rolled coils. If you look at Europe, the steel price is €1,000 for hot rolled coils. And if you look at Southeast Asia, the steel price is close to $1,000 for hot rolled coils. So when you look at it from that perspective, I think the consumers of steel in India are still at a significant advantage.
All right, getting a move on, just checking in as to what's going on with the markets. And as we speak, you're holding out quite comfortably in the green, holding out at that 14,945 mark. The Sensex up about 0.6%, and the traction within the broader markets not going unnoticed, with the fact that the small cap index is up nearly 1.5%. So steady start to the week. Spark is very active. Bajaj Industries looks great, 18%. VATech, Wabag, GMDC, as well as IBREL and BHEL are some of the other active movers, along with Hindustan Copper, South Indian Bank, NMDC and MOIL. Nitin, curious as to whether or not you track anything within the sugar space, how you've looked at recent announcements, and within this niche sector, is there anything that catches your eye?
Most of the companies that we look to invest in are companies who typically have, long visibility of revenues, sustainable return on capital. Sugar has, hitherto been a highly cyclical business, highly regulated by the government, all of which have, not meant that sugar companies have created wealth on a sustainable basis. Having said that, it does look like sugar is in a virtuous upcycle at the present moment. There is a global shortage, ethanol demand is going up, and India is releasing its stocks and enabling sugar companies to capitalize on both these opportunities. So if we were to play this, we would probably play this with one of the most well-run of these sugar companies, and who also have, a sizable ethanol capacity, which is Balrampur.
All right, that's the outlook coming in on some of those movers in trade. In fact, let's get in some chart checks going too. Naresh, how are you reading the charts of Bajaj Industries as well as Spark in trade today?
So Bajaj Industries is something which has been doing really well for the short term, as well as what we've seen today is the momentum has gone crazy. But also the fact that what has changed is it's also a stock which has crossed a 13-14-year high. So back in 2007 when the last cycle started, and that is the time when we actually started hearing about ethanol. So that prices have crossed. So this is an indication of a long-term trend change which has happened. So going forward, any dips back to that 250-270 mark would be a opportunity. Today's move is a little too quick, but going forward, you would watch out for a dip towards 250-270 as a buying opportunity as well. So a 14-year high for Praj, so that's an interesting case.
That's the take coming in, and Praj holding very, very strong in trade. BHEL along with L&T, that's the other mover, holding up 11.5% as we speak. There's NMDC, UPL, these are stocks which are really flaring up, along with, of course, Coal India, HDFC, AMC, Wipro and IOC as well doing a bit of a jig there. The underperformance today has got to be FMCG. That's underperforming as opposed to what the rest of the basket is doing. So flat for FMCG. Cement is in the negative. IT as well is a bit on the back foot. And telecom is seeing muted gains, albeit along with textiles as a sector. In fact, I just want to pick up the cement space. Shree Cement, Ultratech, Ramco, Grasim, Abuja ACC, they're all laggards in today's trading session. Having said that, the performance from Ultratech Cement was good. The brokerages have liked their numbers, but cement also, remember, as a space has run up. So some amount of profit taking is what you're seeing across the board on the cement space as we speak right now. Some of the other names which are holding out, and I just want to quickly check in on what SBI Life is up to, considering this was a big mover in trade last week when its earnings came out, and even before the earnings the stock had actually shot up. SBI Life right now as well holding up by about 0.5%. It's already crossed the 1,000 rupee per share mark for itself on the stock right now. Nitin, where's the opportunity within the entire insurance gamut to, invest afresh?
You just talked about the company. I think the whole sector has a long runway of growth. The kind of penetration that the sector has is very low. Within that space, we really like SBI because we think from a price value equation perspective, the growth numbers, if you compare the new premium growth, in all aspects, SBI compares extremely well to HDFC Life. But the valuation is almost half, so we think that's the best of the pack.
Missed that question there. SBI Life still holding strong. The other space which continues to hold high is, of course, metals. Tata Steel even today is holding up 3%. 1223 is where that stock price is. And sporadically, you're also seeing moves across PSEs, that's PSUs, as a cluster as well. Remember, PSU as a pack held out very smartly last week as well, and you are seeing some odd moves across PSUs today as well. So everything from a BHEL to an NMDC, ONGC, BPCL, they're all on a tear. Of course, the move last week was much stronger than what you're seeing today. But Kunal, the same question as to... it seemed like a flash in the pan, the move in PSUs last week, but again today some of these are holding out. You think there is anything strong or significant happening on the charts, or should one just shrug it off?
I think there's something which is very decisive and very concrete which is happening for the PSC index. In fact, Aisha, if you look at we look at the individual components, and then we see staggered momentum in the sense there are a couple of days where probably BEL moves up higher, then the weighting gets shifted higher to BHEL, and then ONGC, Coal India. So this is an internal rotation which keeps on happening. But then does it have an impact on the sector? So we look at the charts for the Nifty PSC index, for example, and the Nifty PSC index is now coming back to almost a 1.5-year high on the weekly time frame. So assuming if the index closes at this level of 3,400, 3,420, then we believe that this could be a multi-year, at least a 1.5-year high for PSC index. Now, this is what is very important, that if it's a very individualistic kind of move couple of stocks doing pretty well and then, leading the charge, then we could probably have taken this as, one-off rally, and then we could have discounted probably that, these stocks would go through one more round of selling pressure. But the fact that this is having a direct impact on the PSE index overall gives this, something to, look for, at least from a, short-term to medium-term view. So which is why I was indicating, earlier as well, that the PSU index is the one where I believe that the short-term rallies would get converted into trends. So I think which is why for someone who's playing momentum, someone with a time frame of maybe a couple of weeks, or I think they could look at this space because, these stocks, they have a tendency of going through very fast moves on the upside in a very short or a contracted time period. If that happens, then it's possible that many of these PSU stocks, they can rise up by another 8 to 10% higher, at least in the next couple of weeks. So I would be bullish on the space, and some of the names which I just reiterated earlier, like the likes of BEL, BHEL, I think even at current levels of 63, 64 looks fairly attractive. You have Coal India, which is looking quite strong, Zippy in terms of momentum, and even ONGC, which is looking as a prospective breakout candidate about that 120 mark.
All right, let's get a move on then and hear it out from Dr. A. Velumani, the chairman and CEO at Cyrocare, talking about the surge in the COVID cases and how that has resulted in an unpredictable quarter. Despite that, he says the company has managed to deliver a 19% growth.
Both COVID and non-COVID, it's very difficult to comment even for a quarter, because inside a quarter there are monthly ups and downs. If you notice in the quarter Q4 ended, January was good for non-COVID. Half of February was good for non-COVID. Then subsequently COVID had a surge. So COVID surge had put non-COVID down. So in the quarter itself, there are lots of shades of the business. Overall, if I say Q4 compared to the previous year's Q4, we had a decent 40+% of growth in spite of all the disruptions. And overall, the year ended with the 19% growth, which we believe in a year which had Q1 completely disrupted. Ending at 20% year over year was a great success, according to me.
All right, Nitin as well as Kunal, thanks much for joining in and sharing with us your outlook on the markets. As we take this break, the DGCI, remember, has given the emergency nod for the anti-COVID drug that's been developed by the DRDO in partnership with Dr. Reddys. The approval has led to Dr. Reddys being active in trade. We caught up with the DRDO scientist, Dr. Anand Narayan Bhatt, to try to understand how this drug can be used to treat hospitalized patients and reduce the reliance on oxygen.
Emergency use approval has been granted for hospitalized patients only, but soon we will complete all the formalities which is required by DCGI, and then the complete approval will be given, and then it can be prescribed by the doctor for home also, because the use of medicine is very easy. So the drug is basically called 2-deoxy-D-glucose. It is a glucose analog, and it works by it works by inhibiting the metabolism of virally infected cells, and that's how it does not allow virus to multiplicate inside the human body. How it works on reducing the requirement of oxygen is basically, like the lung damage happening because of the viral fast multiplication and lot of mucus accumulation in the lungs. So if the multiplication can be stopped, viral multiplication can be stopped, and this damage to the lung cells will be stopped, then oxygenation and once the patients are kept on this therapy, then what is happening, like in very short span of time, the patients are coming out of that lung damage, and then they are recovering very fast. So that is what we have observed, and that is the reason why by day 3 almost 50%, around 42% people don't need actually supplemental oxygen requirement. So that's how it is helping in bringing the patients out of oxygen therapy very fast, and that is what we are seeing is probably can be a big help in this pandemic time currently, which country is basically facing?